if we just, flip right back and start making new highs, we'll be in the same situation where, it'll be a little nerve wracking because there's got to be another pullback. And especially yesterday with, how much growth was really getting hit, or, the leading growth stocks, it was in some ways a lot worse than what that bar shows.
And you're right. Those who have been watching IBD Live shouldn't have been caught off guard by what happened yesterday. Arusha, of course, we can't predict the future, but we do know from history that when the market is getting extended, the NASDAQ getting extended from its 50-day line, that could mean we could see a pullback. How are you handling your portfolio in yesterday's session? And you're on mute.
Number one.
I think I handle it better than I usually do, and yesterday at least. And the main reasons I refused to watch the market until the very end of the day. I went to the office and distracted myself there with everyone there. So by the end of the day, everything came back. I was like, wow, this was it actually worked. So. Yeah,
we call that the ostrich strategy.
Yeah, sometimes it works, So, what you need to do is a lot of times just take a step back, just like Chris was talking about, where this market was a little extended. They come in all of a sudden just out of the blue, and it comes in really hard. And so you just got to kind of do that scenario analysis, saying, okay, where are the levels where I'll be forced to sell? And I think after that, once you come up with those levels, and ideally you want to come up with those levels when the markets are closed, so you're thinking a little bit more clearly. And so when you have those levels, you could put some alerts in place, or at least write it down. And then when there are bad days like yesterday, you don't have to watch the market. Just let the alerts trigger and tell you, hey, maybe you should take a look at this stock now. Because what I've found, and I do this all the time, if I start watching the markets too closely when it's coming in and everything comes in, it's almost I just go on just an automatic, like, I gotta sell, I gotta lighten up, I gotta sell, right? Instead of using the experience and say, you know what, I'm already down a bunch here. Let's wait till the end of the day to see at least if we get some kind of buying to push it in, because there are plenty of times when you're in stronger markets, or when you're in the kind of the buy the dip type of market, where these stocks will come back a little bit by the end of the day, and then the next day they're kind of coming back up. And all of a sudden, they've recovered at least like 50% of those losses, and sometimes they're almost near new highs. And if you sell too early on those days where you're tested, it's very hard to get back into them.
Right. And Dave is a bit distracted. I was going to go to him next, but Chris, we'll go to you.
Okay.
And switch our attention to Generac, because even though we have a number of movers to the upside that we want to take a look at, a lot of people asking us our take on Generac, because many of them decided to hold full positions heading into the earnings report. So what do you make of this? I mean, it was expected to be down some 6% or so in the pre-market, now down over 10%. What would you be doing at this point?
Well, for me, it's just theoretical because I don't own shares. So something like this, first I would be waiting at least a half hour and trying to see what happens. I mean, and that's assuming that you bought it properly. If you chase this above 400 and now you're underwater, you should at least take something off right now, maybe not everything. But we still
we were talking about it right in here when it cleared this trend line, gapped up in the base.
Right, and this is why we get nervous around earnings, even with stocks that we have big cushions. And actually, go to the weekly.
Sure.
So we can't even see the whole move here. Go to the monthly for a second. And
Happy to.
David was
Look at
talking
that
about this
ascent.
last week. Okay, so it's gone from 60 to 400. Not quite a 10 bagger. I know that's like the minimum that people want to get these days based on what happened last year, but that's a huge move. And so, the further up you get like this, the later stage base, the more the stock becomes priced for perfection, and you got to be ready for days like this. So let's go back to the daily. And we are, already it's off the lows. Maybe 400 is going to be the round number that stops it. But I guess for me, you'll see these sorts of big breaks in stocks, and they'll get support at the moving averages. So I mean, I would really be focused on how it handles itself around the 50-day and the 10-week. There's nothing wrong, for if you take a little off right now. It's always better to be selling into strength rather than waiting for the weakness. But as bad as it looks, the stock isn't broken. I mean, I wouldn't be buying it here necessarily, but I don't think we've seen worse from stocks where they've gone down 20% and then they cut that 50-day and they don't come back.
Right. So you said you could trim some either here or maybe look at how the next hour or so goes for the stock. How much? If you bought it right, went into earnings with a full position, how much of the position would you be cutting? A third, a quarter, half?
You could take a third off or something like that. It just, I mean, what makes you feel, more comfortable right now? There's nothing wrong with taking some off. But I often do my best not to react.
Have a knee-jerk
Overreact.
reaction.
Yeah, knee-jerk reaction, especially early on. So maybe put an alert at the 50-day. You could put an alert at today's low and see if it can hold that. And that would be, maybe the first 2 lines in the sand.
Yeah.
Arusha, how would you, if you were in this, what would you do with it right now? And you're on mute.
One more, and I don't know if we're gonna invite you back.
I just asked you that because I knew you were on mute. I thought I'd get you. No.
Well played.
Tricky, Chris.
Yeah, I would now say, and I had this stock out of that gap when it jumped, and it got, and more importantly, it was getting through that 342 level, and it was getting through powerfully. And this one worked really well. I sold it around at this point, around that 400 level, and so I was upset that, of course, once again, here I go selling the one stock I sell in my portfolio is the one that keeps going up, and all the other stocks are going down.
Is on this down day?
No. It was on an up day, so it was maybe a few days later. So it was on an up day. I just wanted to lock in the gains for one stock, and so with this one, say I had the position still at that gap up, and now it's gapping down here. You're still up on the position, right? So a lot of times I will lighten up a little bit going into earnings, and especially this was at 20%. So I would lighten up anyways. But here with you're already up, you bought around that 345 level. It's gapping down right near a support area. If you look on the weekly chart, it is on the 10-week line. So it gapped right down to the 10-week line. And so I would try to give it closer to the end of the day, see if it gets something. And this is kind of like one of those what I was talking about before. You can set some alerts in place and then don't watch it too closely. Because at least for me, the more I'm watching these stocks, and especially on bad days when you're a little bit more emotional, you're going to find a reason to sell it, or you're just going to say, you know what, I don't care anymore. The pain is too much. I'm just going to get out. I can always get back in. And